All right, good evening, everyone. Good to see everyone once again. My name is Alex from MarketWise Asia. Today it is the 27th of May 2022. Time passes very fast. It is towards the end of May already, and it's going to be the start of the June already. So if you guys can hear me loud and clear, please say a hi to me in the comments. Okay, I am friendly. I won't bite. Okay, today is Friday evening. So once again, I hope you guys had a good evening with your family, and thank you for tuning in to listen to me once again. Okay, because right now, as you know, I mentioned before, Singapore is opening up. There is a lot of places you can go. Okay, but you chose to stay with me online tonight. Okay, so give me a like, share, or comment if you are on YouTube. I welcome you also. Please give me a like also and subscribe to our YouTube channel also. Okay, so let me take a look at the comments right now. Give me a moment. Okay, so Xiangjun, hi. Maurice, Christopher. All right. Han Hawk. Okay. Selby from YouTube. Okay. Kwok Chong, Pei Wen, Edmund, Mark, Pauline, Kenny, Aichuan, Eileen, HS, Sajid, Clarence, Terence, okay, Kok Leong, Karin Chuang, okay, Anita. So good to see every one of you here. So how is everybody doing today? You know, do you remember what I actually mentioned for the past 1 week or 2 weeks? What did I say about the market? So today market not too bad, huh? Today market not too bad, huh? Okay, so the Nasdaq is actually up 2.47%. S&P is up 1.66%. Dow is up about 1%. Okay. Hello, Sarvana. Hello, Siva, Guru. Okay. All right. Wei Jie say, okay, you are now a Friday night speaker. Okay. All right. Anyway, thank you for your support. Anyway, please give me a like, share, or comments. So this is to tell Facebook and YouTube that you want to see more of our content in the future. Because if you don't engage with me, okay, give me a like, share, or comments. Facebook or YouTube, you think that my content is not interesting, and along the way, next time they will not show you MarketWise Asia content already. So give me a like, share, or comment to engage with me. Okay. All right. So let me share my screen right now so you guys can see my screen. Let me just zoom in here first. Okay. So as usual, disclaimer first, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. So Alex is always wrong. So please don't copy me. My opinion doesn't mean that I'm right. So please do your own due diligence. Okay. If everything is good, everything is fine, you agree with that, just give me a thumbs up. Just give me a like on YouTube and also on Facebook as well. Okay. So I'll briefly go through the content today, all right, to let you know what I'll be covering. So once again, I hope I can finish in just an hour's time. I hope so lah, but I don't think I could. Okay, let's try it out. Okay, let's try it out. So I'll talk to you about what's happening in the market right now, the usual news and such. Okay, all right. Of course, I'll talk about some of the chicken thing, you know, sugar, fertilizer. I'll share with you later. Okay, recession. VIX does not have to spike for the selling to end. You know, talking about the small caps, the SPHB, SPLV. If you don't know what it is, okay, you need to listen. I'm talking about the junk bonds as well. All right. Also about the S&P log trend channel. I'll be also touching about the S&P 500 operating earnings per share data with you. So S&P forward P ratio, talking about some of the dollar sync as well. So as you know, actually yesterday the S&P had a pretty big rally that is spurred by the retailers. So their earnings are pretty good. I think Macy's, one of them, the earnings are pretty good. So let's kickstart this event right now, this session right now. So let me just do this over here. All right. Okay, yeah, before I continue, right, just want to do a very short kind of announcement over here. All right, so I think some of you might know we have this Market Insights Virtual Summit, okay, that's coming up I think we'll be rebranding it to the NASDAQ Trading Festival because NASDAQ will be the sponsor. So anyway, the date is firm. It is on the 23rd and 24th of July. Larry William will be our keynote speakers. Okay, he'll be talking about, I'm not sure what his topic about yet, but I think he'll be talking about cycles, forecasting the cycles. So it is, if you have been trading the market, you should know who he is. He is also the, the creator of the Larry Williams percentage R oscillator, right? So yeah, it is not easy to invite him to come to speak for us. Do register for this event and pre-register your interest right now, and you get some exclusive bonus materials. Okay, I've already decided what the materials will be. I'll be sharing with you later in a while. So just key in your name, email address, and mobile, and you are good to go. So let me share with you the link over here. If you are watching this, right, replay, you should be able to see the link over here. But right now, you're watching live, right? You should be able to see the link in the comments, be on YouTube, also on Facebook. So it is bit.ly/LarryW2022, and you'll be brought to this page over here. So just fill in your details. And I've decided that the bonus exclusive materials, okay, I'll be giving you this seasonal sectors, okay? All right, so what are the US sectors that are good to trade the seasonality, okay? You might be thinking, hey, Alex, I can just screenshot this thing. You can, okay? But I'll be giving you a bonus complimentary video, companion video, where I share with you, how to use this data more effectively, okay? And also how to find the stocks to trade as well. So plus together with the PDF of this seasonal sectors data, and also have the currencies as well. Okay, stocks and currency. I didn't show currencies. Okay, so with the stocks. All right, so do register for this event. If you do pre-register, you'll get the bonus material. All right, and I should be giving out before the actual registration, so you will get access to this data PDF with the companion video way before the actual registration. So this is the exclusive bonus just for you guys who pre-register early. Okay, so once again, I'll post the link in the comments. So remember, I'll give you the PDF, the companion video, explain to you how to use this data more effectively and how to find the stocks to trade as well. So I'll post the link in the comments. All right, so let's kickstart this session right now. So of course, so far the hot topic of the month is still on inflation, right? So later I'll go through the chickeny issue. Okay, hello Mary. Okay, so I'll go through the chickeny issue. So I think the news just came in, I think not too long ago. I just read the news on CNBC. So is inflation slowing down? It seems like it, okay, from what is reported from the CNBC. Let me go through the link right now. So this is the news that's just reported, I think about 1 hour, 2 hours ago. So the Fed's favorite inflation measures rose 4.9%, okay, right, in a sign that the price increases could be slowing. So the key thing is inflation is still there, but it is slowing down. So this is good news. But I think previously the CPI, the inflation rate was at about 8.3%, if I'm not mistaken, right? So I mean that it is still high, but lesser, okay, is slowing down. So this could signal, that's the reason why, the market actually rally for the past 2 days. All right. So we still need to see this next coming month, what is the actual CPI numbers, the inflation numbers. Okay. So this is one of the good news over here. All right. And of course, this is the news for this week. All right. If you are residing in Singaporean, you are Singaporean, you should know that, at the start of 1st June, Malaysia will not be exporting their chickens out to Singapore. So we can't get their fresh chicken. All right. So that I think is a big hoo-ha because a lot of these, F&B, especially those selling chicken rice, they need the fresh chickens. Okay. So of course, the news they cited the reason why, they are halting the export of the chicken is because of the higher feed cost. Okay, because it is not profitable now, because of the Ukraine war issue, right, with Russia. And wheat, I think, is one of the I think Russia or Ukraine, I've forgotten which one is which one. Okay, one of the biggest wheat producer, and wheat is used in this, chicken feed. Okay, chicken feed. Okay, and of course, because of this ongoing war, there's cost increasing and such. Okay, so this is the reason why. But the issue is, this is what they tell us, in the surface, on the surface. I am not sure whether there's any insider news behind that, why Malaysia is actually halting their their export. Is there any kind of politically driven kind of reason or what? I'm not sure, but at least from what is given on the news, okay, this is because of the higher cost. The farmers are not profitable and they have not enough chicken for Malaysia themselves. That's why they are halting the export. Okay, so one of these websites that I found is pretty interesting is called the indexmandi.com. Actually, I discovered this from Alvin from Dr. Wealth. He shared about the cost of the chickens, okay, in Singapore pricing, okay. So let's go to this site right now. So Index Mandi, I will post the link in the comments. All right. So you guys can see the chart over here, right? You guys see, if you guys can see, just type yes in the comments. Okay, so just to engage with me, type yes, can see this poultry monthly chicken monthly price, Singapore dollars per kg. Okay, per kg. So you can see that, for the past, let's just put 15 years lah, okay? Okay, for the past 15 years, all right, can you see that recent in, actually last year, the price start to increase exponentially. Okay, I remove this. Okay, yeah, okay. So you can see that price actually shooting up. So right now, based on the pricing that's given here, it is, I think it's about 490 plus to near to $5 per kilo. So this cost increasing is real. So interesting website. So they have a lot of other website, not website as in other data as well. Talking about, let's say, for example, commodities. You can go to commodities, you can check what are the energy F&B index, petroleum, diesel, gasoline. So they have a lot of data. If you're talking about, countries, also they have as well. So let me try to see whether more. Let's try and find more. Interesting. Let's find Singapore. Okay, let's find Singapore. Singapore is over here. All right, so let's key in the data. So a lot of data lah. So age structure, let's take a look. So you can see from the website over here. All right, so you can see from here. Oops, sorry. Actually, from 25 to 54, it is the bulk of the population here. 50% are between 25 and 54. All right, and for our young children, like my child, my girl, 0 to 14 years old, consists of just 12.8%. So a lot of interesting data over here. So once again, I'll post this Index Mandi link in the comments. Okay, so if you think this is interesting site, if you don't know about this site before, okay, just type me in the comments. So at least once again, I know that you learn something new from me as well. All right. So sugar. All right. So once again, another aspect of the commodities is the sugar. There's India is trying to restrict the sugar export over here. Okay. So let's go to this link over here, and just to share with you some news lah. Basically, if you've been reading, you should know. But if you haven't been reading, okay, then just give you some quick ideas is what's happening around the world. Okay, so India to restrict sugar export to prevent a surge in domestic prices, blah, blah, blah. Okay, so I'm not sure whether your coffee, your tea in a kopitiam increase prices in the near future or not. But I'm sure though, it has been increasing now for the past few years already. Okay, all right. So another thing I want to share with you is that this fertilizer, right? Fertilizer. So fertilizer is actually used to grow crops, vegetable, and such. So again, once the data is also from Index Mandi as well. So I'm not sure whether next in line will be, vegetables. So you can see that Malaysia, they claim that also the fishes, they are catching less and less fish as well. So everything is getting more expensive. I'm not sure whether vegetable will be the next in line over here. So can you see this is the price for the DAP fertilizer? It is diammonium fertilizer. It is basically used in agriculture, in crops, in vegetable as well. Okay, so let me go to the, let's just go 15 years. 15 years I think is good enough. All right, so price has been pretty stable since the global financial crisis in 2008. All right, so after that, price has been surging recently also. Okay, so this over here, you can see the fertilizer price has been increasing. So if you grow any crops, vegetable, you need these fertilizers as well. So I didn't really go and compare the prices of the vegetables. So if you have been, buying vegetable recently and often, right? Can you let me know whether prices of the vegetable has been increasingly or exponentially or not? Do let me know in the comments so that everybody can know as well. I do go market and buy, but I didn't really keep track of the percentage and increase of price. So I just see the cai xing, I see the xiao bai cai, I see the broccoli, then I just buy. Okay. I didn't really care about the pricing. At least it doesn't feel, it doesn't hurt me so much. I think I still feel pretty cheap. Okay. And this is just my opinion. All right. Okay. And of course, whether this will cause a recession, I'm not sure. Okay. But this is essentially how recession will kickstart. Okay. So basically, you can just a very simple flow chart over here, like, let me see, Christopher, price the same but less quantity. You mean for the vegetable, is it? Okay. But I see NTUC, they are like packing, the packing is still almost the same. Okay. So anyway, so how recession, could start, as you all know, like raw materials, prices increases, commodities, prices increases. And this has led, for example, all right, Malaysia, they are doing this, engaging this protectionism. Basically, they are kind of controlling their import and export. A lot of times it's import, but this time around it's export. All right, so if you control this kind of export, like for us Singaporeans, right, then this will cause us to increase the price of chicken, right? For example, because inflation will increase and this will also lead to an increase in the business cost, okay, and also increase in interest rate, right? And this will bankrupt the companies because the companies are not making money and such, okay? And once the companies are not making money, what do they have to do? Okay, they have to retrench people to sustain their business, right? So once people get retrenched, people lose their job, and once people lose their job, they spend less, okay? And once people spend less, they don't go out and buy more stuff, buy more consumer goods, your shoes, your bags, your food, whatever it is. You used to buy abalone prawns and all this, but now you just to eat all of this food, all the prawns companies, abalone company, they'll start making lesser money, and this company make less money. And what do? Okay, they retrench people. And what after they retrench people, what do? Okay, the people lose their job once again. So the cycle repeat and repeat and repeat, and this will go into a spiral, and this will get even worse. So once that happens, okay, the government need to step in. Of course, they have to do be the fiscal policy or monetary policy. Monetary policy, they'll kind of reduce the interest rate and such. That's more catered towards the US. Fiscal policy, they'll engage, engage in more projects, build more infrastructure, basically just want to push more money out. All right. Like we don't say this is a multiplier effect. Okay, so this is just looping, keep repeating. Okay. And yeah, so this is the recession, like, what might happen in the near future. I don't know how long will it be. I think for Singapore government, they're expecting like maybe in the near 1 to 2 years, a recession could be coming. Okay. All right. So this is the end of the news segment. So I hope you guys have a very good idea of what's happening around the world right now. So if everything is good, everything is well, just type good in the comments so that you know, understand what I'm trying to say, so I can proceed forward. Once again, right now we have about 250 from YouTube and from Facebook as well. Do give me a like, share, or comment if you're just joining me. If you think my content is good, just share to more people as possible. Okay, of course, I have a selfish reason, okay, because let more people know, okay, people attend our summit, there'll be more sponsorship. More sponsorship meaning that we have more revenue, more money, right? Then I can continue to sustain this, content to you guys, creating all this content to you guys to update you guys, right? Okay, so if you like what I share, just give me a like, share, or comments, and also type good in the comments, okay? So I think in my YouTube, I think a few days ago, I think it's on Monday, I shared with you guys that, the VIX does not have to spike for the selling to end. How many of you actually watch this video? If you watch this video, right, just type me in the comments. So let me go to this YouTube over here. This is MarketWise Asia. Just search MarketWise Asia. If you are watching, right, just subscribe to our channel. All right, so you can see over here, I think it's just 4 days ago, it says that VIX does not have to spike for the selling to end. The reason, I'll just briefly go through, okay, I think there are some people who already watched, but for the benefit of doubt, for those who didn't watch, just briefly go through, but you can go ahead and watch this video once this live is over. Okay, so the reason why I want to do this video is because, all right, because there are people who talk about saying that, VIX must rise for the selling to end. As I mentioned in the video, this is like a very strong statement, a must. So 100% must rise for the selling to end. As I mentioned, right, please do not treat everything you have read or listened to online as the need to have your own judgment, read more, understand more. Okay, so but the answer is no. VIX need not rise for the selling to end. VIX does not need to spike, okay, for the selling to end. The reason why it is because I mentioned in my previous YouTube video that this is the SPY. You can just go to this SPY chart, okay? SPY chart, okay, you can add the VIX over here. All right, VIX over here. Oops, not this one. Just give me a moment. Right, compared to the VIX Volatility Index over here, into a new pane over here. All right, so I think it's in 2006. 2006. All right, so 2006 over here, this is on the top is the S&P 500, the SPY ETF. At the bottom is the VIX index. So you can see over here in 2006, there is also a correction or sell-off or mini crash, whatever you call it. So this is over here. And then the VIX actually spiked to a pretty high level to about 40. 40 is pretty high. Okay. So after that, there's a rebound, dead cat bounce, whatever you call it, and then price, retest the low again. And this time around, when the price retests the low over here, okay, the VIX actually didn't spike up. Okay, it is still maintaining near about 25 to 30 level. And subsequently, okay, and then retest again. Subsequently, it's also near about 25 or 26 level. I think it's about 27 over here, 27 over here. Okay, 27. And then this mark the end of the correction and price just rally all the way already. So the VIX didn't spike. Okay, the VIX didn't spike. So it didn't say that it must spike for the correction to end, right? Okay. And then there's another case is in 2018 over here. 2018, I think some of you might remember, there's also a very pretty sharp sell-off over here. It dropped about more than 10% plus. Okay, of course, it is still considered a minor correction compared to this year and of course the COVID crash. But nevertheless, during that time, it was pretty scary, okay? So it had a kind of a correction, steep correction. The VIX spike up to about I think about 36 or 37, okay? And then rebounded and then go down again, all right? But this time around, the VIX also didn't spike a lot, okay? It just hovered at about 25 level and subsequently price just rally all the way already. So this statement is actually not true. VIX must rise for the selling to end. It is simply not true. Let me find, I forget the reason, as in I forget the person's name. Carson. High volatility. Let me take a look. Wait. So I didn't prepare beforehand on this. Let me see whether can I see or not. Okay, it is over here, all right? So this by this guy called Sam Carson. Okay, he is from Kai Volatility. Basically, as I mentioned in the YouTube video, it is a fund house. So everybody is waiting for the VIX geyser to mark a short-term bottom, and it didn't happen in 2016 or 2018. This is called the second move phenomenon at work. They call it in their investor letter. So I won't go through once again. Okay, I think you can watch the video itself. But essentially, what they are saying is that because for the first sell off, right? All right, for the first sell off, okay, the VIX spike. So the market participant already know that there could be more correction to come. Those who shorted the IV, the implied volatility, basically those who shorted volatility have already taken profit. Okay, and those who long volatility also taken profit. So net off already. And this group of participants, okay, or the rest of the traders, they are already anticipating there could be another leg down. Okay, so basically another leg down. So they are already buying options or whatever it is to hedge their position. And because they are already anticipating that there could be another leg down, there could be more downside to come, they are already hedged. Okay, so that's why the volatility, the IV is being suppressed. And once it is suppressed, okay, the VIX will not spike. Okay, so everything is clear so far. Okay, just type OK in the comments. Okay, while I go through to the next session already. All right, so I've talked about the market right now, right? So we can get some clue, okay, from the market, whether the market can continue to hit higher or not. So can get some clue from the small cap and also the junk bonds as well, the high yield bonds lah. So let's take a look at the market right now. So the Nasdaq, it is up 2.57% now. Okay, S&P 500, it is up 1.77%. Okay. All right, so today is pretty bullish. So it's like near the high for today. All right. So, but I want you to, okay, why I think this was the bottom previously. Okay, I hope you guys still can remember. If you are new to me, just watch back my Facebook Live or YouTube. Okay, I already mentioned that there could be a potential bottom because of some of the market internals, market breadth, and such, of course, and the VIX. Okay, all right. I don't want to go through that already. So moving forward, okay, let's see how this small cap and junk bond can give us a clue. All right, the small cap is actually the IWM Russell 2000. So I will use the IWM over here. All right, at the bottom, okay, I'll do a naked chart easier. Naked chart over here, IWM. At the bottom, I will put the S&P 500. All right, so this is a new pane. I'll put candles so you guys can see easily over here. You guys can see the chart, right? So of course, if you see at the bottom, the S&P 500 actually is toppish at the start of the year or towards the end of the December last year. This was the toppish, right? At the peak, okay, at the peak before the sell-off started, all right, until this year. But if you realize, right, for the IWM, for the Russell 2000, all right, so actually last year, since the start of February 2021, okay, 21, somewhere around here, the Russell 2000 small caps has been ranging for almost a year, all right, for almost a year. So this was the ranging part over here. Can you see that ping pong, ping pong, ping pong, ping pong for a while, while the S&P continues to head high up. Of course, you know, a lot of people are investing in the S&P big cap stock, Tesla, Microsoft, Amazon, Google, all these are the hot favorite. So people really, most people, I would say, that don't really care much about the small cap. But of course, if you really watch the market, you can see the Russell 2000, it is ping-ponging all the way. And once actually in November, you can see the dotted line over here. This was the resistance. And actually, many people actually expected it to be a bullish move, anticipated it to be a bullish move, okay? Because price do a breakout. There's a breakout over here, all right? There's a breakout over here, all right? So people thought, hey, you know, after consolidating for so long, this is going to be another huge move up, okay? But the issue is this happens to be a false breakout, all right? And the market just tanked since November, okay? All right? Since November, and the market just tanked all the way. So this is kind of a leading indicator. So let me see for the Nasdaq. Yeah, Nasdaq also tanked about in November. The IWM also in November, the Russell 2000. But this actually give us a clue already, okay? And where else the S&P 500 continue to struggle a little bit, continue to move higher up before eventually collapse and did a correction over here. So the small caps are the first to go down, followed by the Nasdaq and then the S&P and then the Dow, okay? And right now, okay, they seems to be the first to recover as well. So you guys can see over here, right? This is the Russell 2000, and below is the S&P 500. All right, can you see that there's a divergence over here? While the S&P form a lower low over here, the small caps has actually recovered faster underneath the scene. Okay, they form a higher low previously already. Of course, now they chom up already lah. Okay, can you guys see? So it means that, you know, this risk on mode seems to be taking place once again, where people, investor, fund houses are piling onto this smaller company again. And when the sentiments gets much better, normally people will also want to invest in the small caps as well. So this could be one factor, okay, or one, you know, potential signal that tells us that the market, okay, might continue to head a little bit higher. So we shall see. All right. So this is one factor also. All right. And the other factor is I want to talk about is also the junk bonds. Okay, junk bonds. Okay, difficult to pronounce. Also a sign, all right, that the investors' appetite for risk might be improving. All right, this JNK, it is the ETF ticker. Simple to remember, right? Junk, right? JNK. Okay. Once again, the JNK is also kind of a leading signal as well. Let's go to JNK over here. By the way, these junk bonds are the corporate bonds, high yield bonds. They are deemed more risky. Okay, so can you see that for the junk bonds, also somewhere they peak, all right, in fact, they peaked much earlier. They peaked in July last year, all right, and they are not going higher. All right, it's also a telltale sign. Of course, all these are in hindsight, but it's already a telltale sign that people are not willing to take more risk already. So kind of risk off mode, potentially risk off mode. Okay, risk off mode. All right, risk off. Okay, and then price just would just dive all the way before the stock market dive down. All right, and from what I see, right, the junk bond normally they tend to lead a few days to I think about one to 2 weeks time. Okay, so can see that while the market was still relatively muted over here. Okay, the junk bonds has already started to rally a lot more. So this also tells us that the sentiments might be changing, and people are willing to take more risk as well. So that could potentially give more room for the index to move higher as well. Okay, do you guys understand what I'm trying to say? If you understand, once again, just type yes in the comments so that I know that everything's good, everything's well. I'm referring to the junk and the small caps as well. And also remember, last week I actually mentioned about the intermarket analysis, right? Intermarket analysis. I talk about the Forex, okay, the dollar index, the treasury bonds, and such, right? So I'm just share with you. So of course, right now at this moment in time, the sentiment is actually still divided. Okay, there are people thinking that it is a thick cat bounce. It is going to be bearish again very soon. I think for me, I'm still tilted a little bit more towards the bullish side. So let's pause for a while first. Let me know at this moment in time, okay, within the next, I would say within the next 1 month, basically 4 weeks, are you still bullish on the market, or are you bearish about the market? 1 month, 1 month time frame within the next 4 weeks. Are you bullish or are you bearish? Okay, bearish meaning that you think this is a dead cat bounce, DCB, and the market will continue to dive after that, after this rebound. And if you think that after more than 1 month, price can continue to head higher, or you think that this is the absolute bottom, you can just type bull in the comments. If you are bull, just type bull. If you are bear, just type bear. Okay, your long-term view. All right. So let me go to this Facebook. By the way, last week I mentioned about Robin Ho because also talking about Adam. The reason why I talk about them is because these are some of the gurus that I follow, because I respect their views. Okay, because they have been in the market for so long. Okay, all right. So I think today, all right. So let me just zoom in. I think just today only, Robin actually posted this. Global market is rebounding from an extremely oversold position. Okay, the most significant price action that caused this rebound is the reversal in the 10-year yield and also the dollar index. You remember this, right? I already mentioned this dollar yield, as in the yield and the dollar index, in my last week Facebook live already, right? So yeah, okay. For the market to achieve real reversal, inflation must be under control. Fed need to turn dovish on the interest rate. Oil price need to settle down to go below 50. We're beginning to see recession setting in, which I think Robin doesn't believe that it's going to be resolved so early, and he thinks that the downtrend will resume when the rebound it is over. So Robin, it is still bearish. Okay, all right, it is still bearish. Okay, so what I'm trying to say there is that different people have different views. Okay, for me, I'm tilted still more towards the bullish side. Adam Khoo is still more tilted towards the bullish side. Okay, and Robin more tilted towards the bearish side. And I know there are a few other trainers and even overseas YouTubers, the gurus. Actually, in fact, quite a lot of them are also more tilted towards the bearish side. Okay. At the end of the day, I think that don't be affected by our comments, our opinion. Okay, you need to learn to have your own judgment, because sometimes when a very influential person said, hey, you know, it is going to be a dead cat bounce, whatever, okay? It doesn't have to be Robin, it can be any other people, okay? I'm not referring to Robin, okay? To be mistaken, I respect everybody, okay? So just tell you that everybody have different views. So because we could be wrong, we could be wrong, all right? So remember in the 2020 COVID sell-off, all right? Okay, no, right, okay? 2020 COVID sell-off, okay? 2020 COVID crash, all right? I remember your kind of feeling previously in 2020. I made the mistake of overly bearish in 2020. So I actually missed half of the bull run. Actually, yeah. So I missed that. Yeah. So I do not want to make this mistake again. So at that point in time in 2020 crash, you know, I was thinking, hey, you know, it is going to be the crash. Market has been out for so many years already. You know, this like the final nail in the coffin. That's it. This is the crash already. Okay, there'll be more downside. So when price actually rebounded up, I was thinking that this is going to be a dead cat bounce. Okay, price rebounded up somewhat cannot be so true. This is going to be a dead cat bounce. Okay, until you know price just rally all the way, and the rest is history. For the past 2 years, right, it has been a very fantastic years, right? So you should know. So again, you know, I want to tell you that, you know, do not be overly bearish. Do not have a fixed opinion. Once you are proven wrong, right, then you need to be more fluid and change your opinion. If you are bearish, you know, it turns to the bull, you must really follow the price action and turn bull as well. If you are bull, price has been telling you that it is really going down, then you have to follow the price action. Okay? Do you agree what I'm trying to say? If you agree with what I'm trying to say, just type agree in the comments. Okay, don't be so fixated in the kind of your bias. All right, so Chris is asking for my FX trade. What is your stop loss and target profits? Later, I'll try to answer later. Okay, I want to go through all my content first. If I forget your question, do nudge me again later. Okay? All right, so yeah, so talking about that. So yes, okay. So I forgot what I talk about, right? Yeah, anyway, yeah. So yes, so for Robin, it is over here. Okay. So have your own judgment. Do not be overly biased lah. Be ready to switch anytime. So I'm also ready to switch. So let's say if I'm bullish, right? Price really test the low again, break the low again, then I'll back to bearish mode again. All right. So talking about that, right? So at this moment in time, right, as I mentioned, we do have a swing low over here. So let me go back to the chart over here. All right, I will use the S&P 500 as the example over here. So right now we have the swing low. This is confirmed a swing low. Okay, this is confirmed a swing low already. At least a short-term rebound. At least a short-term rebound already. Right? Okay, at least a short-term rebound already. So now the issue is, right, how far can price rebound in the coming weeks? Oh, by the way, next Monday is a public holiday in the US. It's a Memorial Day, so there's no trading, just to let you know over here. All right. So let me just use the naked channel. All right. So this is the rebounding has been pretty strong today. I would like to use the volume profile to give us a hint, potential, idea where the resistance could be in the next 1 or 2, 3 trading days. All right. So I will use this volume profile. All right, volume profile over here. I will take from the peak to the low over here. All right, this is from the high and then to the low. All right, volume profile, for those who don't know, basically you are trying to find out at which particular price is there the highest volume transacted. So you know that the normal volume here, right? They only tell you that the whole day volume. They don't tell you, okay, at which particular price was there the highest volume over here. All right. So the volume profile actually tells you that. And that highest volume, right, is the point of control. And normally those high volume area tends to be a support and resistance as well. All right. So you can see that from the peak to the trough over here. All right. This is the S&P 500. Can you see that? Okay, this lighted mountain over here, this hill here, right? This is the high volume node as well. Okay, high volume. So this is actually a potential kind of resistance. All right. So can you see that price has actually already broken past this high volume node already, firmly broken above. So we are quite clear of this 4020 level already. So the next area is actually the value area over here. All right, the value area, VA, value area, which is the dark zone, the dark blue area over here, where 70% of the volume is transacted over this area. This is considered the value area. I repeat, value area is where 70% of the transacted volume. All right. So of this value area, the top boundary and the lower boundary will be acting as a support and resistance area. So can you see over here between the dark area and the light blue area, this is the boundary over here. So somewhere around here, this is the lower boundary. So this will be the lower range of the value area, right, will be acting as a resistance right now. Okay, I'll be watching this over here. Okay, so also it coincides with the kind of the classical resistance over here, somewhere around here, right? This is classical resistance, okay? All right, so the area it is about 4187, all right? This is about 4190. I'll be watching the price level over here. I do have some position, so in some ETF and also in some stocks. So if price actually hit that level within the next week or so, then I'll be watching that level. I might take profit and such already. So I will see that level. Okay. So this is based on future price 4190. All right. So for the number, just teasing. Okay, not for the number. Okay. If you understand this concept, value area, the resistance at 4190, just type 4190 in the comments. Okay. Or I take a sip of water first. 4190. Right. So the value area resistance over here, 4190. And for the NASDAQ, okay, the NASDAQ, the peak was actually in November. So I will drag this volume profile over here to the peak over here until the trough. Once again, we can see that this, high volume area, not the highest, but you can see over here, right, somewhere around here, that was at about 12350, 12345, 12340. Okay, somewhere around there, okay. Anyway, not important. We have already broken above this level. The next level, it is actually the value area, lower boundary over here, which is between the dark and the light blue area. Okay, the value area over here. All right. So it also coincides somewhere with the classical support and resistance area as well. So this will be a very important resistance level overhead. There's a lot of overhead supply. So I do expect some pause or kind of a correction again, some sell off again. All right. So the number, it is about 12827. All right. So it is about 12830 for the NASDAQ futures. So I'll be watching this level also, 12830 potential level. Okay, these are the two. Dow, I won't go through already. Okay, you can use the same concept to find the value area, resistance and support area. All right, so if I add in my standard indicator over here, okay, all right, of course the central pivot range, it is at this green dotted line over here. Okay, all right, so it is still pretty far away, and May is going to end soon already. I don't think within the next one to two trading days we can go and hit the central pivot range lah. All right. So this is the cloud and the pivot range. For those who are new over here, you don't know what I'm talking about. Never mind. Once you watch a few more sessions with me, you know how I use the central pivot range and also the cloud. But if you want to know how to install this indicators into TradingView, all right, you can watch this YouTube tutorial over here. This YouTube tutorial, I'll post the link in the comments. Over here. Okay, basically the central pivot range is to find the support resistance zone and the cloud to determine the trend. All right, and the silver lining, the good news is, okay, next month is the new month. We have a new central pivot range. Okay, of course we are not end of the month yet, but I roughly calculated, okay, based on the current price now, the next month central pivot range is somewhere around here. Okay, somewhere around here, like that. Okay, somewhere around here. All right, which means, all right, we have already broken above June CPR, and this is a good thing. Okay, as I mentioned, right, when price is above the central pivot range, okay, this tells us that there's a potential that price can continue to move higher, and the downtrend is actually weakening. The downtrend is actually weakening. All right. Of course, we are still not out of the woods yet. Okay, we are still below the cloud. All right, below the cloud. We are still in a downtrend based on the daily and the weekly time frame. Weekly time frame, we are also below the cloud. Okay, that's why we are still in a downtrend. And for the S&P 500, all right, we are also below the cloud. But one thing to take note, okay, I remove the volume profile. So can you see that this region over here, the cloud, all right, is also to be acting as a resistance area. Also coincide with the volume area, value area, volume profile area. All right, it is somewhere around 4190, very close there. So I expect within the next week or so, if price reach there, then 4190 will be a pretty heavy resistance lah, All right. Okay, meanwhile, okay, this is an important question. So Alvin, 1 more month above CPR before bullish outlook as per last session mentioned. Yes, that's right. So it's only 1 month. Okay, it's only 1 month. So we need at least 2 months to be above the central pivot range. This is what I mentioned last week, right? It is still there. I never throw away my things. Okay, I never throw away. Price to be above the CPR for 2 consecutive months. So the earliest, right? Okay, preferably above the cloud also is in July. Then so in June, price above the central pivot range. In July, price also above the CPR. All right, I won't go through that again. I think I'm not enough time already. So yeah, price to be above. So you can see that generally after a correction, a downtrend, or whatever, price above the CPR for 2 consecutive months, then we can safely say that the uptrend, high potential that it is in an uptrend right now. All right. So yeah, so this is the outlook for the S&P 500 over here. Okay, any questions so far regarding this? Okay, you can type in the comments. Then you can ask me again. But meanwhile, I just want to share with you. Okay, I mentioned about these are SPHB and SPLV. So at this moment in time, we have at least formed a short-term bottom, right? So what are the sectors, or what are the stock that you could be looking at? Okay, if you think the market could be continue to move higher in the future. All right. So what I'm going to do is this SPHB and SPLV, comparing the ETF. This is a high beta stocks versus the low volatility stocks. Okay, so if you go to the ETF.com/SPHB, essentially, to keep things simple, high beta stocks is those stocks that tend to move higher than the market average. Okay, so high beta, so it is more like the growth stocks, that kind. All right, so they track a beta weighted index of the highest beta stocks in the S&P 500. All right, so they track about, you can see that a lot of these are in the tech sector, electronic technology, tech service, finance. So a lot is in the tech, for about more than 40% is in tech. So these are the high growth, high area kind of companies. Okay, Nvidia, Fortinet, EPAM, Enphase, Advanced Micro. Okay, all right. These are the growth stocks. And then the SPLV, they are more like the consumer defensive. Okay, low volatility. When the market there's a correction, price tend to it won't drop so much, okay? All right, it still drop, but not drop as much as those high growth stocks. All right, so this is the S&P low volatility ETF. So as you can see, like they track the 100 least volatile stocks in the S&P 500. All right, so you can see over here they are mainly in utilities, consumer, defensive, finance also. Okay, utilities quite a huge section, like PepsiCo, Johnson & Johnson, Coca-Cola, Duke Energy, all these are defensive, okay, utilities. DTE Energy, all these are defensive stocks. So the thing that I'm going to share with you is that, you could potentially, at this point in time, look for those tech companies, high growth stocks, because they have already beaten down. All right. And this is the thing that I'm looking at. All right. You can use the ratio over here, SPHB versus SPLV, the ratio. So we can see that which is outperforming each other. Okay. So can you see that at the start of the year, all right, this high beta stock, remember this is SP HB, HB versus the LV, right? So the HB is the is the numerator, LV is the denominator, right? So basically HB is at the top. So HB is facing the headwinds at the top already. So at that point in time, market had a correction and all the tech stock, everything just came down, correct? So that was not a time to buy into all these tech stocks, high growth stocks, etc. And right now, the ratio is suggesting that we could see a turnaround potential, not 100%, not guaranteed. Do your own due diligence. So you can see that this was the prior resistance. Okay, prior resistance. So we draw a line over here. All right. So in fact, 2020 was a fantastic year for all these growth stocks. That's why since 2020, all these high beta stocks had their day. So they really performed very well. And since 2021, still performing, but not so well until 2022, it really down all the way. And right now, this resistance area turn support area right now. You see over here, this resistance turns support area right now, which means that there's a potential chance that within the next few weeks or so, if the market continue to go higher, then all these tech companies, growth stocks might continue to head higher. All right, might head higher. Okay, of course, how high it will go, I don't know, but there's a potential chance that within the next few weeks, if price continue to head higher, the market to head higher, then they can head higher lah. Okay, understand so far? If you understand, just type, okay, engage with me. At least I know HB, high beta stocks. Okay, type in the comments, high beta stocks. Wow, very thirsty. Okay, Ken? Well, I'm using the ratio to tell me that within the next few weeks or so, these high beta stocks might outperform market compared to the low volatility stocks. Okay? HB, thank you, Mary and Daniel, for your comments. There are more than about 250 people engage with me lah. Okay, like, share, or comment lah, so that at least you know that I'm not talking alone. Okay. All right. Yeah. Okay. And the SPX log channel over here. Okay. So let me go through the SPX. I will use the Oh, yeah, I used it. I forgot I used the futures chart or the. Then I use the ES over here. So of course, if you're using the daily time frame, this looks very scary, the kind, the uptrend, that kind of parabolic move like that. So I think that price can come down like that or not. But if you actually look into a log chart, this is still pretty manageable. Okay, still looks pretty normal over here. So let me draw a trend line over here. Okay, so can you see over here, this is a weekly chart, right? Price touching the high over here, high over here, high over here, then I project upwards, right? Okay, so of course, this is only in hindsight. In hindsight, nobody will know. In hindsight, then we know that, hey, actually, this is a time to actually go for a short. The market is hitting a top already, then go down, right? So this is hindsight. The over is over already. If we didn't catch it, never mind. But, moving forward, I could see a potential trend line support over here. Oops. All right. So can you see that over here for the past, how many, since 2011? All right, since 2011. Maybe I use the monthly chart. I think can zoom better, Okay. 2011. Okay, so basically the lower trend line channel, okay, touch the bottom over here. All right, and then touch the bottom, this bottom over here, touch the bottom over here, and then right now we are touching over here. If you zoom down to daily time frame, okay, once again we are touching the bottom over here. Okay, so of course, whether price, how high can price go, nobody knows, but at least we can see that this could be a potential short-term bottom over here. All right, and this is using a log chart. Okay, and price looks much more normal in a log chart because for the past 2 years, price has increased kind of exponentially. All right, so this is another bullish thesis, hypothesis for me, whatever you call it. Okay, so yeah, I am kind of tilted towards the bullish side. Of course, you can have 101 reason why the market is going to be bearish. The inflation is going to go up, it's going to come down soon, and a lot of other things. But at least this is what I see using a chart. Okay, all right, so I just trade what I see. This is my opinion, doesn't mean that I'm right. All right, so this is another example over here. Another one, why I think that it is still okay, the market is still okay, all right, so far, is based on the S&P operating earnings per share data. You can go to this site called Yardeni. This person actually has a lot of data. So I'll go to the link over here. I'll post a link in the comments, yardeni.com. So you guys can see, right? So this is a PDF file over here. All right, so show the S&P revenues and earnings. Okay, what I'm interested in is actually this S&P 500 operating earnings per share. Okay, this is the one over here. Let me try to zoom in. You guys can see, right? Okay, bigger right now. So you can see that during the 1999 .com crash, the operating earnings are actually negative. Okay, 1999 to the 2001, 2002. Okay, this is negative. So it's not surprising that companies are not earning money. So the market just crashed. All right, and then this is the 2007, 2008, 2009 global financial crisis. The operating earnings is also negative. Okay, not surprising as well. So the market also kind of crashed. But right now, okay, of course, in 2020, the COVID, there's a brief time that the operating earnings also drop negative. Okay, there's a COVID crash. So right now at this moment in time, based on the quarter for last year, our operating earnings is still positive. It is still positive. Okay, it is not negative yet. Of course, there's a deceleration of the operating earnings. Okay, but it is still positive. It is still positive, of course. All right. So moving forward this year also, price can go like this. Earnings can go a little bit down, but overall, I think we are still in the positive territory. And I think recently about the retail is still pretty strong. Okay, I think as long as we don't go below the zero mark, the negative territory, I think we are still pretty okay. I think we're still pretty okay. This is again one thing that I'm looking at also. All right, can go to the link I shared in the comments. Can go and take a look. So this is one aspect I'm looking at as well, the operating earnings per share. And the other one that I'm going to share with you is this S&P forward P ratio. Okay, right now the valuation after this kind of a reset, right? All the tech stock, everything can be dropping, right? Actually, right now it is not so overvalued right now. It is okay. So this is the S&P P ratio. Of course, during the 2008, it's crazy. The P is up to about 65. Okay, and right now we are at about 20.85. All right, 20.85. You can see at the bottom over here. All right, the mean is actually 15.97, about 16. So right now we are about 20. Not the cheapest, okay, not the most expensive, but I think we are at a kind of a fair value. Okay, can you see that? Okay, not the highest, not the lowest. We are actually not that expensive after the recent correction. So I think still pretty okay. Of course, doesn't mean that right now it's cheap. Cheap can get cheaper, also can go down to like, I don't know what level is that, 5, 6 PE ratio. Right? But right now, I think that we are not that expensive. Okay, not that expensive. And the operating earnings is still positive, although it is kind of slowing down. All right, so I think overall still okay. And if we can control the inflation, all right, then that could further propel the market more. So next month, I think inflation will be quite crucial as well. All right, and also right, the bonds market, as I mentioned last week, the intermarket analysis, right? So this is the 30 years bonds. Okay. As I mentioned, it has an inverse relationship with the EU, right? So when bond price come down, EU price goes up, right? Okay, so this is the 10-year EU over here. So it has peaked at about near about 3.2, and then it's coming down already. So the market is actually pricing in that inflation. We are not expecting any more interest rate hike, and which means that inflation could be taming down, it could be slowing down. Okay, so that's why it is starting to come down. All right, and of course, if this 10-year you continue to spike upwards, then we have a problem. Okay, the market is pricing that inflation is not over yet. There will be more inflation and such, and the yield will continue to go higher. All right, and also right, I mentioned last week also about the dollar index. Okay, dollar index. For the past 1 year, since the start of the year, the stock market and the dollar index have a negative inversely relationship, right? So when the dollar go up, the stock market go down. Okay, so the dollar go up, stock market go down, right? Okay, so right now we can see that the dollar index, the dollar is having some headwind also, resistance, and it's coming down, tapering down, coming down. Okay, which means that this would also signal that there's a more potential upside for the stock equities market as well. All right, so this is like previously, market is in a risk off mode. Everybody is scared, just pile in on the USD. So right now, it seems like the market is not so scared anymore. People are, you know, kind of in a risk-off mode, selling off their USD as well. It's coming down. Okay. So judging from this, okay, right now I think we could see more upside. We could see more upside, but you know, we are hitting the resistance level pretty soon. This is the S&P 500 at about 4190, Nasdaq at about 12830. All right, is everything clear so far? Is everything clear so far? Okay, everything clear? Just type clear in the comments. And I'm talking about, okay, talking about that. Okay, the USD Okay, so I think one of the trade that I have done and still holding is, I think, is the most straightforward. I mean, of course, nothing is easy. I can't know for sure that it is going to come down, but I think yeah. So just to share with you what I did, okay, I think I mentioned, I think last week or 2 weeks ago, all right. So the dollar is coming down, right? The dollar's coming down, as I mentioned, I think 1 or 2 weeks ago, and the Singapore government is trying to control inflation, so they cannot control the interest rate. Okay, so they use currencies, Forex, via Forex to control the inflation. They want to strengthen the USD, right? And strengthen the Singapore dollars, right? As such, okay, we know that the dollar, okay, it is coming down, and the Singapore dollar is government is trying to strengthen it, okay, coming down and going up. So this is more like a clear-cut trade to me. So I actually shorted one time over here. All right, when it comes down over here, I take profit, okay, and then yesterday I shorted somewhere around here, and then I'm still holding on. Right now, it's still in profit lah. So I mean that right now, I think there could still be more downside to come. There could be, I can't confirm. Okay, I'm already in profit already. So I mean that if you want to enter, you could be a bit late. All right. Yeah. So a potential one. Okay. And let me see. Yes. So USD. So this is one ideas also. Okay, but of course we won't know. So have your risk management in place. I think there's yeah, okay, Chris is asking, right, for your FX trade, right, what is your stop loss and target profit? There is no specific, you know, pips, number of pips, okay, number of pips. All right, so Chris, so let's say I shorted in, you know, let's say for example, this dollar sing, right, dollar sing over here. I shorted this candle over here, right? My risk is actually, I just put somewhere near the high only. Okay, near the high. Somehow I can't do that. All right, never mind. Okay, so my risk is over here. Okay, my risk is over here. My entry is I think somewhere around there. Somewhere around here. Right. So it is 85 minus 43, about 40 pips. So about 40 pips only. My stop is about 40 pips. All right. It depends on the Forex pair. It depends on the Forex pair. All right. Target wise, right, I will see, you know, based on my pivot point, you know, where potentially can price go. So potentially, you know, price could go down to this level over here. All right. Okay, then I just hold on to the trade over here lah. Okay, so again, I won't know how low can the price go. Along the way, you know, I will take profit, you know, or I will see that price seems like stalling, right? Then I'll just, you know, just exit the whole position completely. So as long as I have more than 1:1 reward ratio, risk to reward ratio, then I will take. So for example, if I risk $100, okay, and my profit is right now is 120 or 150, 1.2 to 1.5, then I can consider closing all of my position, because on textbook people say that want to get 1:2, kind of risk reward, right? It is actually not that easy. 1:2, sometimes you have to tahan a pullback, which means that price can do something like this, come down a little bit, play with your feeling, go back up again, pull back, and then come back down again, or come back or go up again and come back down again. So it might take many days for the trade to hit 1:2 risk to reward ratio. So if the market can give me a very clear cut 1:1.5, for example, then sometimes I will take already. Okay, I hope that is clear to you. All right, my explanation, all right, can or not? All right. Any questions so far? Okay, once again, I cannot complete in 1.5 hour, more than 1 hour already. All right, so it's 1 hour 20 minutes. Any questions so far? All right. What do you mean by which is better, your ratio or the Buffett indicator? I'm not so sure about the Buffett indicator. Which Buffett indicator are you referring to? Okay. Anyway, I don't really look into Buffett indicator. So these are something I look at. Okay, you can just use your kind of judgment to judge whether this is something you can look at also. All right. So Chris is asking, if price went down then went up to your entry, do you exit? Yes. So for example, right now, if let's say for example, my risk to reward is already 1:1, so I will shift my stop. I will shift my stop to my entry price, Chris. Okay, so let's say for example, price is now coming down, right? And then maybe next Monday, price move back sharply again, hit my stop. Then I'll exit with break even. I'll exit break even. So I'm fine with that. Yeah. So the key thing is once you are in profit, right? Don't lose money. Don't lose money. The important is don't lose money. Okay. Win a little bit is fine. Just don't lose money. Okay. Yeah. So let's say for example, if I risk $100, price only move a little bit, okay, let's say my stop is here, okay? My stop is here. So price just move a little bit, okay? And then price reverse back up again. Then I won't touch my stop loss. I will just let it stop out. Because you never know one. Okay, I'll just let it stop out. So once you set your stop in place, okay, just continue with the trade plan. So once you set your stop, just put a stop there, price hit the stop loss, you get out, okay? If you make some profit already 1:1 reward ratio, you can consider to move your stop to the break-even price. Can? All right. So any questions so far? I hope the session today is beneficial to you. So just a very quick recap over here. So I talked on a lot of things, inflation, how it lead to recession, the VIX does not have to spike for the selling to end, why the small cap and the jump bond is suggesting that the investor appetite for risk may be improving, and for the high beta versus low volatility. Okay, moving forward, if the price can continue to go higher, the index, right, then you can consider to go for the tech stocks. Okay, compared to those defensive stocks. All right, it seems like ready for a bounce for the tech stocks. All right. And based on the S&P operating earnings and the ratio right now, we are still have positive earnings. Ratio-wise, we are still not that expensive, at a pretty fair value. Okay, all right. So as such, we have already right now, hit a short-term bottom, which I mentioned that last week, we are either at the bottom or very near to a bottom. Whether this is the absolute bottom, nobody knows, but at least we know that for sure this is a short-term bottom. So we are going to hit the resistance pretty soon. All right, as I mentioned, right, the red dotted line is the resistance. Nasdaq, the resistance is at about 12830. So yeah, once you reach there, there could be some sell-off again, a correction. Okay, so be wary of that also. Can? All right, so if you think that today's session is useful to you, do give me a like, share, or comment. I've only got 71 likes only. I think a lot of people, just liking is free, doesn't cost you money. Just give me a like, share, or comment. Okay, if you think that is useful, do share it with your friends. All right. And also, before you go, I just want to let you know that we have this Market Insights virtual summit, okay, on the 23rd and 24th of July. Most likely, we'll change it to the NASDAQ Trading Festival, but the dates remain the same. Register now, pre-register, and you get exclusive bonus and material free your name, email address, and mobile number, okay? And the bonus that I'm going to give you is this seasonal data over here. So tell you, which are the month to invest or to trade in certain sectors. Then you may be wondering, right, might as well just screenshot this, because I'll be giving you companion PDF and also the video as well to explain to you, how to use this data more effectively, and also how to find the stocks. Now we have the sectors already, how to find the individual stocks to trade. So all these are pretty useful to you, I hope so. So do register now. Only those who pre-register will get it, and you receive this bonus before the rest of the people who register for the NASDAQ Trading Festival. Okay, so definitely before 23rd and 24th July, you'll receive this bonus materials to you. So let me get the link to you over here. This is the link. Where is it? Yeah, so see Larry live in July over here. If you are watching this replay, you can't see the link. Just go to bit.ly/LarryW2022. If you are still here, right, you can see the link in the comments in YouTube and also on Facebook. All right, also do subscribe to our YouTube channel as well. So I think with that, I shall end tonight's session, about 1.5 hours already. So Friday, weekend, I hope you guys enjoy your weekend ahead, and I hope you guys get some, good information from me. Okay, so thank you so much for being here with me. All right, so I will see you guys again next week. Thank you. Bye-bye. All right.